In today's episode, we're diving into a backtest of my personal variation of the 714 method. Just a quick heads up. This isn't the original version of how the 714 method is meant to be traded. This is my own twist on it, and we'll be looking at how it played out in the last week. Let's jump in. Alright, so this is gold on the 5-minute time frame, and just to be clear, my chart is set to UTC +2. Now let me explain how I approach the 714 method with my own twist. I don't use the 2 p.m. vertical line or the opening price line like the original version. What I focus on instead is the 1 p.m. vertical. That's my key reference point. From there, I look for support or resistance levels to time my entry. So let's backtest this starting from Monday and see how it played out. So as always, our focus is right here at 1 p.m. That's our key point of interest. When we observe price action from that time, we can clearly see that price has been pushing to the upside. Now, if you're familiar with the original 714 method, you'll know that when price is moving up, we don't chase buys. Instead, we look for selling opportunities. That's the key concept. So I start by looking to my left, and boom, I spot this recent high. I mark that zone as my most recent resistance. And as price approaches it, in my head I'm already thinking, this is the one. This is the moment I've been waiting for. I enter a sell position confidently. But reality hits. What happens next? Price pushes back up, completely reverses on me, and I get taken out of the trade. Now this is where most traders start doubting themselves, start switching strategies, or even worse, take revenge trades. But you need to understand something important. These types of losses are part of the game. No strategy in the world has a 100% win rate. And this is exactly where mindset kicks in. You have to move away from the beginner way of thinking, that every setup must work perfectly, every candle must respect your zone. That's not trading. That's a fairy tale. In reality, the market will humble you over and over again if you don't learn to adapt. So when the market evolves, we evolve with it. With my variation of the 714 method, we keep it simple. We work with support and resistance. And when I zoom out a bit, I spot another high where price previously reversed. That becomes my second resistance. Now here's my rule. I never go beyond the second resistance or support. Ever. Why? Because price can be tricky. Sometimes it disrespects the first level, sometimes even the second. But if it goes past the second cleanly, it's just not your trade anymore. You don't want to take 3 losses on one idea. That's how you burn out your account and your confidence. So we set up a second sell position at the second resistance, using the same concept. And this time, price respects it beautifully. It drops and gives us a clean move. We target the same low we initially had, and boom. Not only did we recover the earlier loss, but we end the session in profit. That's the beauty of staying calm and sticking to structure. This whole process highlights something very important. The market isn't about perfection, it's about probabilities. You're not here to be right every time. You're here to be consistent over time. And if trading was that easy, let's be honest, we'd all be millionaires by now. But it's not. It takes patience, discipline, and a mindset shift. Once you stop chasing perfection and start respecting the process, that's when the real growth begins. So if you took a loss, it doesn't mean the strategy is broken. Sometimes the market just needed to clear out the noise before showing its real direction. And if you stayed focused and trusted your levels, you'd have caught that second setup and bounced back like a pro. So yeah, this is how I trade the 714 method with my own spin. Nothing too fancy, just clean levels, solid risk management, and respecting what the market shows me. And as we move through the rest of the week, you'll see how this plays out again and again. Let's keep going. All right, so now we're on Tuesday. And as always, our focus reference is right here at 1 p.m. That's our anchor point. Now, when we observe how price moves from that moment, we can clearly see that price pushed to the upside again. So based on the 714 method, that would typically mean we're looking for selling opportunities, right? Cool. But here's the catch. When we look to the left, we don't really have any obvious resistance zone nearby. The only clean, clear resistance is all the way up here at the top. And as you can see, price never reached that high. It didn't tap into that zone, didn't give us an entry confirmation, nothing. So what do we do in a situation like this? Simple, we do nothing. We don't force a trade. We don't convince ourselves that maybe this is still a valid entry. No, if the setup isn't there, we move on. This is one of the most underrated skills in trading, the ability to do nothing. Sometimes the best trade of the day is no trade at all. And trying to force a setup where it doesn't exist is how you end up giving away profits from the previous day. Remember, we're not here to trade every move. We're here to take high probability setups only. If the structure isn't clean, if the zone isn't obvious, and if price doesn't come to you, let it go. The market will be here tomorrow. All right, so now we're on Wednesday, and yep, same routine. Our focus is right here at 1 p.m. That's our key moment. Now, when I look to the left of the chart, I can clearly see this is the most recent resistance zone. Price has rejected from this level multiple times before, so it's a significant area, not just a random line we're drawing. So when price comes back up and taps into that zone again, we don't hesitate. We go ahead and place a sell position, following the same logic we've been applying. But unfortunately, price decides to push just a little bit higher and hits our stop loss. Now, this is a more realistic example, because let's be honest, in the real world, you're not going to place a crazy wide stop loss that covers half the chart. That's just not how proper risk management works. You're going to set your stop somewhere reasonable, based on structure and logic, and sometimes price will still come for it. That's just how it goes. It doesn't mean the zone was wrong. It just means the market had other plans. And this is exactly why trading is a game of probabilities, not certainties. You can have the perfect zone, a clean entry, follow your rules, and still take a loss. That's part of the process. The key is not to let one trade shake your entire confidence. You've got to think long-term, because the edge only shows up over multiple trades, not one. All right, now let's look at Thursday, and you already know the drill by now. Our focus is right here at 1 p.m. So, when we observe price movement from that point, we can see that price pushed up again, which means we're on the lookout for potential selling opportunities. Now our job is to look for the most recent high. That's going to be our resistance zone. And man, that high was really far, like way up there, but we're still sticking to structure. So I mark that as my resistance and wait. Now look at this. Price eventually taps that zone and starts to pull back slightly. It shows a bit of reaction to the level, which is exactly what we want to see. But unfortunately, the move wasn't that aggressive. It gave a bit of a drop, but nothing major. Not the kind of move you write home about. So in this case, we can call it even. Maybe you caught a small scalp, maybe break even, or maybe just a tiny loss. Either way, not a strong trading day, and that's okay. Sometimes the market just doesn't give you a clean opportunity, and the best thing you can do is protect your capital and move on. So with that being said, let's move over to Friday and see how the week ends. All right, it's Friday, and as always, our focus point is at 1 p.m. After observing price for a while, we can see that price pushed up right from that moment. So we go back to our rules, and we identify this right here as the most recent high. Now watch what happens. When price reaches this high, it reacts beautifully. It rejects the zone and reverses to the downside. Exactly the kind of setup we look for. Clean structure, solid reaction, and a nice opportunity to catch the move. But here's the bigger picture. Whichever strategy you decide to use, whether it's this variation of the 7-1-4 method or something else, you need to accept one thing about day trading. This is your reality. You're going to win. You're going to take losses. And you're going to win again. That's how it goes. The difference between those who make it and those who give up is the mindset. If you can stay focused, keep learning from each trade, and show up with discipline, you're already ahead of most. So don't let a bad day break you. Don't get overconfident after one win. Stay consistent, trust your edge, and most importantly, never give up. And that wraps up our full week of backtesting my variation of the 7-1-4 method. As you've seen, some setups played out beautifully, some didn't. And that's the reality of trading. It's not about being right all the time, it's about being consistent, managing your risk, and staying disciplined through it all. If you took anything from this video, let it be this: trading is a long game. You're not here to win every day. You're here to survive long enough to win big over time. So stay focused, stay patient, and most importantly, keep showing up. Don't forget to like the video if you found value. Drop your thoughts in the comments and subscribe if you haven't already. More breakdowns, live trades, and market gems are coming your way. Until next time, trade smart, stay sharp, and never stop learning. Peace.